Welcome to today's session from the Summer Adtech series, and I'm delighted to welcome you all. You're all now entering the room. Today's session, we have one at 2 o'clock now and one at 4 o'clock, and it's going to be hosted by Union, who are the strategic partners to thousands of local market publishers and very well placed to be hosting two panels that are talking about all things video advertising. My name's Julia Smith, and I'm the founder of the Digital Voice, and myself and our team, we host events for our clients like Union on this very unique platform. And it's unique because not only will we be able to see the panelists in a moment, and I'm going to welcome them on stage, you'll see in your right-hand column, you'll see chat, which enables you to chat, both general chat, but also when we go to tables, you'll be able to then interact with your tables. I'm just looking at the chat now. Thank you, Natalie. Welcome. And then you'll be able to see the participants. Next to each person's name, you'll see you can connect with them directly on messaging or on LinkedIn and be able to see who's there and talk to them. And the third one, and most important, is the Q&A. This is an interactive panel. Do ask questions. Once I've invited the panelists on, I'm going to leave the stage, but I'll be back at the end to ask some questions and also to ask questions of our moderator, who I'll welcome shortly. The final bit is after 40 minutes. This is where we get you guys to network, not just with each other, but meet and greet the panelists. So we then go to the tables, and you can you can move around tables. You can talk to up to 8 people in a room with all the heads on there, chat those, move to the next room, and actually be able to interact and network live on this platform. So that's what the session's going to be about today. So I'm delighted to welcome to stage Seb Joseph, who is brand editor of Digiday, and who's going to be the man. Welcome. There you are. How are you doing?
I'm good, thank you, Julia. How are you?
I'm very well. Lovely to have you here. I'm going to dive off stage and leave you in charge because you know what you're doing and you're brilliant. Yeah. And I'll be back to then ask you some questions at the end, but I'll leave you to welcome onto stage the panelists. Thank you very much.
Thank you. Hello, everyone. Good morning and good afternoon, wherever you are. Thank you for joining Union session. My name is Seb Joseph, as Julia mentioned, and I'm the brand editor for Digiday in the UK. And I'll be moderating today's discussion, which is going to explore the role of publishers in the video ad market in 2020 and beyond. I'm joined by an illustrious group of experts from agencies and ad tech vendors who I'd like to welcome to the stage now. Here we go. So before we begin, I'm going to ask them each to introduce themselves and explain a bit about what they do. Ruth, can we start with you, please?
Yeah, hello. Firstly, thanks for inviting me. My name's Ruth Cartwright. I'm the managing partner for delivery at Carat. So my responsibility, I'm accountable for sort of all media output and activation for Carat clients.
Lucia?
Hi guys, my name is Lucia Mastromauro. I work at Adform. I look after all of our global client partnerships, including Dentsu and other agency holding groups. We provide ad tech solutions for buy and sell side, but our focus mostly it's buy side at this stage.
And last but by no means least, Steve.
Wishing I was on the beach, like Lucia. So yeah, Steve Filler, MD of Union. Union is a joint venture between 5 EMEA-based video companies who each support local publishers with their with video content, technology, and monetization. And Union brings all that together to make it easier for global brands to run multi-market video.
Great stuff. Thank you, everyone. So to kick things off, let's set the scene and talk about how the pandemic and the subsequent downturn is impacting the video ad market. You know, it was one area that was tipped to be one of the main beneficiaries of the lockdown at the onset of kind of everything back in March. Ruth, let's get your take first.
Yeah, I suppose, I mean, we never really knew what was going to pan out from the lockdown and how it was going to affect clients' budgets and particular media owners or platforms. What we have seen is that obviously for, you know, whilst we've been in this process, you know, there's been instances where video has been affected and publishers with COVID, so whether that's sort of whitelist or blacklist blocking and COVID blocking, and that's been a big piece throughout, as we've encouraged. I mean, it's a very a personal sort of client decision, but we found that was really sort of around education and tackling clients and business, different agency perspectives as well. So ensuring that actually there wasn't any misguided blocking, because not all COVID coverage was negative. I mean, you have to have some common sense applied there as well. So, you don't want particular clients that are inappropriate around COVID content, but the majority is informative. So yeah, that was certainly something that came up quite quickly, and that sort of, was a conversation point for a number of months.
Lucia?
Yes, well, from an ad vendor perspective, what we've been observing the market and trying to keep tabs on where our clients and both agencies and advertisers have gone in terms of behavior. Immediately out of the crisis, what we saw, it was a shock and a lot of reactive, not necessarily a more measured approach to budget, to pulling spend, or sometimes to being very fearful of anything relating to their brand positioning. But what we've seen throughout the crisis is that the initial shock kind of became, I wouldn't say an opportunity, but I think brands and agencies learned a lot through this process and learned how to make the best out of not necessarily the best of situations. We have seen interesting trends within markets, within different types of clients, different types of brand behavior, and specifically to video, we've seen a massive growth in actually video ad spend shifting a bit, mostly because being a platform that operates across media, we've seen a massive shift immediately from out of home, digital out of home, or budgets coming into digital that were originally not in digital, especially for brands that continued to spend. And I think video has benefited out of this, video and TV, connected TV per se.
Mm-hmm. I think the agility has been absolutely brilliant as well. One thing that we've demonstrated as an industry is that we can react very quickly, whether that's from a creative perspective, deferring monies, moving monies, giving advice and guidance. That's been a real positive, because it certainly means the timeframes from a TV perspective that we worked to before, which are much longer, we know we can shorten very, very quickly and be very agile in that respect now.
Yeah, and I also think from an industry perspective, the positives, I think, have been just an increased recognition of the importance and value of publishers, not just for advertisers, but at this time to provide guidance and advice to consumers. So it does feel like there's been a genuine sort of industry push to acknowledge and want to support publishers. And of course their audiences are up and engagement is up. I guess the challenge is just resource and being able to continue to, from a video production perspective, being able to support the required output. But hopefully that kind of, I think that industry recognition is important, especially at a time like now when we're seeing the sort of Facebook boycott and that, I suppose, reevaluation of quality and trust.
Steve, build on that point. How do publishers capitalize on that recognition, especially when video can be quite hard to produce for some publishers in the areas that brands want right now? Lots of publishers are producing kind of video tied to the current news cycle, for example, which brands are obviously kind of sensitive about.
Yeah. I mean, I think for any publisher, it has to be a sort of a multi-layered strategy. So the first piece is education. So they have to continue to educate the market and work with agencies who I think have been brilliant through this process of acknowledging that a blanket block of COVID or other sensitive areas isn't the approach. I think people are getting smarter, and I think we're catching up. So education continues to be a key pillar. I think kind of publishers also have, in many cases, have sort of diversified their video output, and it's tough. It's tough to make that pay for publishers, and the big scaled publishers can do that well, but for the niche publishers, that's always going to be a challenge. But I think kind of owning certain content categories and being known for something is a great opportunity. But then I think, for publishers, it's also continuing to be receptive to working with partners who can add value in that process through content and support their needs in areas where they just don't have the capability.
Lucia, are you seeing that appetite for publisher-owned video kind of come through across, your platform?
Yes, I think just to take a couple of steps back, a few years back, there was a lot of fear from brands and agencies about user-generated content, and that kind of died. The narrative died down a little bit. A lot has been talked about in panels and conversations in the past 3 months about COVID and brand safety. And taking those two pieces together, the safest place for a brand, I would say, is where the content is created and created creatively. Nowadays, to produce video, well-produced video in a very creative way, very fast, with the right people in the group. So I think for publishers, it has been a massive opportunity for them to take a step back and reassess what they can produce and how fast they can produce, and also get close to the agencies and the brands to understand what direction they want to go necessarily. Either, on publishers that are building content reactive to what's happening day to day. Obviously, it's the content that they output, but there is a lot of opportunity for publishers to co-create with brands and agencies and create experiences that benefit, that entertain the audiences, which are produced fast and also engages to the current narrative in market. And I think that is hard for a social platform to do at scale. Well, obviously they can do a lot at scale, but for them to really get close to the brand and do that in a truly brand safe way, I think there is a lot of value for that to the publishers to explore, and agencies as well there.
Yeah, Ruth, are you seeing those types of partnerships between publishers and advertisers around video?
I mean, even we've had sort of some smaller scale publisher relationships that have been sort of generated not just from this, these circumstances, but even like a metro.co.uk type thing. There's been things that have been very client-led, consumer-focused. You've got partnerships that clients can be confident that it is a client-owned space. So that's sort of enhancing trust. It's taking away that concern around being around particular content that is inappropriate or overtly political, etc., where we're the space we're in at the moment. And I think we're seeing publishers as well, they're creating their own sort of proprietary video content. They're looking at tech, how they can speed up people's ability to stream, download, all of those elements where they're contributing, I think is really important. And I think we'll see a lot more of that. But yeah, I think it's definitely an area for growth.
The nature, I guess, of the video that publishers are producing starting to kind of change as well. Is it kind of less about sort of hard-hitting news, which they have a lot of expertise in, and kind of more about content that may be a bit more uplifting or tap into kind of people's passion points?
I think there's definitely more culture pieces at the moment, whether that be health and lifestyle, mental health, finance, big sector for people to, from an education piece. So yeah, it is shifting. I think there's always been publishers that have had that content and category prior. I mean, even if you go back, out of video, but publishers creating podcasts and how they develop and grow in their sector. Video, we've almost sort of fast-tracked video over the past couple of months to that content and how they've pushed it to the forefront of their offering. Because if you think about publishers in the respect of commuter press, obviously down, and how do they then get that content out to their viewers and support their readership? That's how they're doing it. So there's definitely categories that are seeing much more of a focus and that are being invested in more for their readers.
Steve, what does that I guess if we are starting to see more of these other alternative categories start to come to the fore, like, what does this mean for kind of news-based video, particularly given what we've seen happen to kind of news content, you know, editorial, like text-based news content?
Yeah, I mean, I think the challenge for publishers is that, you know, news clearly will drive scale, but has some challenges in terms of monetization. And I think we can get through some of that because, you know, politics and other areas still is getting bundled as news still. But really, you know, these are just people who in the old days of media would have been opinion formers and, you know, would have been valuable audiences. So I think we can get through things like that. But yeah, I suppose it's how can agencies and clients work with publishers to identify video content opportunities outside of news that they will support, that publishers can invest in, because I think it does need a kind of a planned approach, because sometimes it's difficult to scale those areas, so the publishers need to really invest, not just in the content, but in ways to attract the audience, and they need to know that that's going to be supported by the agency. And I think there's great partnership opportunities there for publishers. But then, yeah, they will also continue to need to turn to, you know, other opportunities and other video vendors and ways to help them grow their resource, because the reality is, you know, most publishers are not blessed with huge video production teams. It's tough. So I think it's about the industry in general just trying to help the publisher provide their audience with the broadest blend of media that's possible.
Sure. And Lucia touched on this before, but is there an opportunity for publishers to tap into the amount of money that's being redistributed by advertisers at the moment? You know, a lot of brands that I'm talking to, well, I have talked to in recent weeks, kind of, you know, they speak often about them moving money away from areas like outdoor and kind of radio and print into digital, particularly when it comes to video. Lucia, do you want to build on that, given, you know, it's something we've spoken about in the past?
I think that there has been a behavior change in the past 3 months. I think all of us are testament to it, that we've spent a significant amount of time on screens than ever before. And it's not just not being outside. We've been online a lot more through work, yes, but even because we are stuck at home in the evenings, over the weekend, etc. Well, some of us. But I'm stuck down here. But with that, the types of publishers and the type of content that are being consumed are expanding, and that generally creates an opportunity. Also, the kind of brands that are engaging in advertising at the moment has shifted balance a little bit. We know that many categories are dark or on quite a low level of spend, but many categories have risen up and have become quite creative in the way that they are engaging their audiences. And there has been a massive acceleration towards video and connected TV type inventory. And in some of the definitions of connected TV, they actually bundle in video to make up that kind of total amount of dollars that are spent digitally with what they call digital TV. I think it is an acceleration that has created a diversion in the curve of growth for video as a whole. And with that brings opportunities, which I don't think is just momentarily. They are long-lasting opportunities for publishers, opportunities for brands to rethink how they communicate. And I think a lot more license has been granted to brands and agencies and publishers to be more creative as well. Yeah. I don't know if I've answered your question exactly there, but what we've seen is that kind of those dynamics kind of changing when talking to actually someone at Dentsu recently, based in the US, that C-level person said, well, there's no way going back. All of these budgets that once were in other channels have gone through to video, to connected TV, and it's unlikely that it will make a comeback. So I think I mean, I don't want to be overly positive because it's still a time of caution, but I think it's a very exciting time for video specifically, and for publishers that want to be creative in the space.
I think there's definitely, again, it's different by market, different by territory, obviously, but there is an opportunity at the moment, and certainly for publishers to sort of focus on their first party data, looking at ensuring targeting for relevant audiences, use the subscription data. There's video analytics. There's so much that we are focusing on, and I think there's another element around experimentation, that sound on or off for video, and that's been a piece where we've seen clients, does it affect, is sound on or off a premium or not? I don't know, that's debatable. But is that enhancing a consumer and a viewer's experience? Is it expected? Again, it's come back to sort of more contextual advertising, and it's brought it sort of full circle away, and it completely depends on who's watching it and where and when, more than ever. So I think we've sort of gone back a few steps, which has been good, because we're sort of readdressing the balance of quality and context on behalf of clients and with publishers.
Yeah, and I guess also, Ruth, it's interesting how much mobile has accelerated that conversation, because the sound on or off piece, that once you take that into a mobile world, it becomes much more skewed to sound off, which you'd never have thought would be the standard, but as in terms of user experience. So I guess it's also how agencies and creative agencies.
Yeah, and it might be the use subtitles, or giving the viewer, the audience, the option themselves of off or on. I mean, all of those things are being sort of fast tracked, and just sort of we're going through them quite quickly to try and find that sort of gauge of what works and in what space it works. Because if you're watching a YouTube video, you might well expect the sound on. But if you're watching some news and it's editorial content, you don't want something blaring, and it's all about that environment and context. So yeah, to your point, it's quite interesting at the moment.
On that contextual advertising side of things, do you think this is going to kind of accelerate the move towards that? Because I guess in the aftermath of GDPR, there was a lot of talk about how the industry was going to kind of coalesce around that, and that kind of didn't necessarily kind of happen at the rate people thought. So I just wonder, given just how much we're seeing, how many trends we're seeing accelerate in such a truncated period of time, if that's another one that we'll kind of see kind of really develop over the next kind of 3 to 6 months.
I think it has to. I mean, that's going back to sort of Ruth's point. I mean, that's the opportunity for publishers, the intelligence they have, the understanding of how people engage in different contexts, and absolutely that also varies so significantly by market. We did some research during the pandemic, and consumer attitudes to placements aligned to certain content in different countries varies significantly. So publishers have that intelligence, and it's how do they sort of package that for the brand in a way that enables them not just to target effectively, but hopefully also to start to produce creative that kind of adapts, or not necessarily dynamically even, but just that is tailored to different contextual environments and moments that the consumer is in.
It's a reset. It's a really good reset. Sort of back to trusted premium content. I think it is needed. Yeah.
Lucia, what does that look like from the Adtech side of things? Is there a lot more focus on kind of curating some of those sort of kind of more premium titles?
Absolutely, and also making sure that this discoverability within the platform is made always on an ongoing basis easier for the buyers to be able to get the correct and the best inventory that they can, which aligns to the brand. I think programmatic as as a subject went a little bit too far out onto the audience world. You know, doesn't matter what the context or the place is, as long as I get my audience. A little bit of the, you know, consideration of what mindset that user was when seeing an ad was forgotten at large. So the not just GDPR, but many of the policy changes that are affecting the industry is a good reminder to the industry that you can take a few steps back and rethink of what worked well. I personally think that context is great, but it's not. We will exist in a world that you don't just have to rely on context. I think context and audience will be important. How audience is accessed will change significantly in the next 2 years. For publishers, it is a lot of change, but it also poses opportunity because especially the publishers that have a very close relationship with their audience, they will retain that first party data, their first party audience, and there will be ways that they will be able to activate that in a compliant and privacy compliant way. It would be trickier for ad tech vendors to handle that. We think personally we are in a great position. But that aside, I do think that there will be a massive 180 shift in the industry in the next 12 to 18 months. A lot of panic, but something we spend a lot of time nowadays kind of discussing and inviting agencies as well to have a conversation about, publishers who have a conversation about. But we do see a path forward, and I think the panic will be important to reset a few things to good practices, but there will be an avenue where context and audience done well will really empower the right publishers and the right brands and kind of sieve off a lot of the clutter.
Sticking with that point for a sec, like what implications may that have for the kind of open marketplace versus, you know, P&Ps, trusted marketplaces that we've seen a lot of advertisers look to set up in recent, you know, the last 12 to 18 months this year?
I mean, the agencies have gone down the route of P&Ps because it enables them to have more confidence on the inventory that they are buying. It gives them, it removes a lot of the fraud and issues that you see on the open exchange. It doesn't mean that the open exchange is necessarily bad, but it takes a lot of effort for any buyer to police everything that they're doing and ensure that in one side they're getting a bargain and they are taking advantage of pockets of inventory that other people might not be focusing on. But it doesn't come, you know, as press a button, plug and play. They have to spend a lot of time just to make sure what they're buying is exactly what they're intending to buy. P&Ps removes a little bit of the overhead, but it adds all the overheads because there is a lot of back and forth with the publisher, which takes a lot of time from the publisher and for the audience. We do believe in a better world, which we discuss a lot with our agencies, which is bringing the buyer and the seller together closer in that sense. I do think for the larger brands, for the larger agencies, and for the best kind of brand activations, the closer you can bring the parties that matter, the better. And it's not just technology, it's relationships as well. And programmatic has pitched a world where it doesn't matter, you don't have to have a relationship with anyone, but anybody who's in that industry knows that that's not real. If you want quality inventory, you need to know who really has the quality inventory. If you want, you know, great activation, you need to know which agencies are doing that. If you want to produce great video, you need to know who can do that. And then having still the human element there is helpful. Technology allows for a lot of automation and a lot of efficiency, but I think that this challenging time is just reminding everybody that there is a balance there.
Yeah, I think they're really good points, but I also think that's where, you know, we've seen some recent success from on the alliance front, which is where company, whether it's Ozone or, you know, what Union is trying to do, which is make it easier for agencies to find the right supply in the right markets and represent those publishers and make sure that the right media is being represented, because it's tough for agencies to do that globally when, let's face it, at the moment, you know, agency resources are stretched anyway. So I think I agree with everything Lucia says, but I think there's also a kind of a middle ground of partners who can add value in that process.
Interesting point, Steve, which is collaboration within the industry and even collaboration amongst competitors per se. Publisher co-ops are flourishing. Ozone is one of them, but also NetID in Germany. The Nordics have a number of initiatives up there as well, and that publishers need to work together to face the challenges that are coming in 18-24 months, and which aren't small challenges. Identity is a big challenge. I don't think personally there will be one ID that will survive. I think it will be a multiverse of ID, but I think as an industry we expanded a lot, but I think it's a time to come closer together and enable each other to be a little stronger.
Ruth, what's your take on the alliances? How have they kind of...
I would echo what both Lucia and Steve have said, actually. Before this panel, myself and Steve were talking about that sort of return of trust and the trusted partnerships and relationships that agencies have with their clients, that agencies then have with media owners and platforms and publishers. It's never been more important. And, you can't dismiss, that sort of broad sort of scattergun approach. It doesn't work. You have to have a very focused view on the relationships that you want to have in the industry on behalf of your clients and as an agency. And it's really important, because if you don't have that and that collaboration, and with that is, very transparent, open conversations about what is possible, what isn't possible, but a good view of what is coming 6 months, 12 months down the line, because we all know that we operate in a space that we're already thinking about 2021 and what's happening and what the impact of COVID will be then, and on video, programmatic, whether it's moving from sort of, universal IDs that you just touched on, Lucia, and you to see it more as a multiverse. It's absolutely critical if we're to make progress, and significant progress that works for all parties. That obviously has to be collaboration.
Sure. Okay. And despite everything we've discussed about kind of publishing, the opportunities around video for publishers, are they facing an uphill battle here? Is there a danger that, because advertisers don't have enough kind of time and resources at the moment, they're having to do more with less? It makes it harder to find some of that untapped video inventory from publishers, and I guess there's that temptation, right, to kind of just go for the lowest hanging fruit when it comes to defaulting to the simplest kind of media plans. Lucia, probably best to kick off with you, given again it's something we've discussed in the past.
Yeah, I don't aim to, step into Ruth's work. She knows this way better than me, but obviously with less resourcing, people will make sure that they try to be as efficient as possible. And my fear is that perhaps they overlook being sophisticated in how they take advantage of pockets of media, and if you talk about programmatic discover, the inventories that and test and iterate on what really works or doesn't work well. It's very easy to set a rule and say just buy video against this audience and leave it alone. But I do think as well, because a lot of people are trying to default to easier setups, probably because they're a lot leaner. There has been a lot of furloughing in the industry, so probably the operational teams are quite overloaded with more work, less people. So set up the simple way rather than the complex way, kind of easier way to define it. That there is a lot of, my hypothesis is that there is a lot of opportunity being left behind, which would take a second look in the sense of, what would that publisher what would the impact of this campaign be in that publisher that might not be in my top 5 publishers on my media plan? Or is there anything different and interesting that could be done that isn't just the social media, buying video in the social media platforms? What other publishers are doing that is interesting, different? Which publishers, for example, are investing heavily on culture? How many brands sit down on my brand associated with culture? I'm sure a lot of brand managers would say so, but might not be top of mind on a day-to-day basis because everybody's so busy doing other things. So I think there is just taking a step back and rethinking, what am I doing? Am I operating on a sort of a default way? What are the opportunities that everybody's overlooking right now that might deliver great activation at a cost-effective ways and in uniqueness as well?
I think from an agency point of view, there's an awful lot to navigate at the moment. But one of the things that you have to bear in mind is you have to balance, the cost perspective, obviously, but it's got to be the right strategy, and you've got to be reaching the right audience for your clients. So you are always opening up yourself to sort of those innovations, the first to market opportunities. I think one of the pieces around sort of branded content from publishers at the moment that will be really key as we sort of move forward is, they're very good. They've got trusted sort of premium content. And when you talk about, culture as well and how we tackle that space, because there's an awful lot at the moment of nervousness from just generally sort of, whether it be different clients or, the industry around attaching yourself to a particular news story or issue, and that you shouldn't always shy away from that, because I think consumers and viewers are quite understanding. If you've got something that is actionable and you've got a proper affiliation with a subject, then actually why as a brand you should be connected to that. But it's about tone, it's about trust, it's about working out what a particular publisher and brand is looking for. It's an awful lot to navigate, that to try and sort of comprehend when you look at how you plan and then implement across video or across any media now.
We've got a few questions come through in the Q&A from the audience that I kind of wanted to go through before we kind of head off. So the first one is coming to you, Ruth, and they've asked, as an agency, are you willing to pay more for that trusted video content? And by extension, what should publishers do to warrant such an increase in CPM?
That's a double-edged sword question, isn't it? I think, right, we've talked about it before. If you look at the Facebook situation at the moment, there is a real balance between a cheaper cost per view or cost per lead, whatever, cost per acquisition, whatever your KPIs are. But we are seeing clients globally step back from that platform. And actually, what is it that we could use to replace, to look at? And there is a cost or a premium when you place media elsewhere that applies. That the short or the sort of easier answer is absolutely, if it's premium trusted content, you look at the difference between a broadcast or VOD CPM versus elsewhere. Yes, clients are happy to pay for that, because there is no discussion around or a fear of coming up against something that is inappropriate politically, culturally, the list goes on. And I think when you say warranting an increase in CPM, I think we almost need to, we've spoken about a reset. We have to rebalance. What is it that we actually want? Do we want content that is, quality, trusted and premium? Yes, there is a price, attached to that. Or are we in the space where we want sort of cheaper inventory, but with that comes a whole host of challenges? We almost need to find the middle ground again. That there is not, you can't morally say I don't want to be here, but I'm not willing to pay for it. So yeah. It's probably a whole different panel session. So I'm not sure if I answered that very clearly, but.
No, I think you're right. I think it's definitely something, the idea of kind of ethical media strategies is definitely to the fore a lot more. I think you're starting to see that with some of the PMPs that agencies are being asked to kind of set up now off the back of the Black Lives Matter movement.
Yeah.
So yeah, it feels like, you know, as this Facebook boycott gathers steam and kind of makes these issues kind of top of mind for everyone in the industry, that I think, you know, to your point with that middle ground, people kind of naturally gravitate towards it.
I also think it's about CPM, but it's also about longer term. It's about commitment, isn't it, as well, and working in collaboration. So, you know, it's a much different picture if a publisher knows that an agency is going to commit to an investment on certain video categories over a period of time, where actually you're going to monetize all of that video that you produce, versus spikes in, you know, high CPM from an agency here and then some low open market and some unmonetized. So maybe it's about that meeting halfway as well. Publishers need to kind of make the step towards helping the agency reinvest that money out of Facebook and other platforms.
And you know, it does come back to, you know, a client's KPI. Is it an incremental reach piece? Is it a cost per? All of those things have to be considered. So there's not really a straight answer to that, because there's so many nuances.
Sure. Okay, I think we've got time for one last one. Julie's probably going to tell me off again every time, but I'll still get in. So are consumers growing more vulnerable to targeted advertising? If audiences have more control of what they consume, would this funnel them into more and more niche categories of market segmentation? Who wants to take that, Vista?
So the question is around consumers being able to control. Okay, be able to. Well, I guess there's certain elements of control, but I think that's probably more to the point in a kind of social platform than on a publisher platform, in a way, where people are consuming certain content, and you can still target people based on their interest. So not necessarily all about the audience. Going back to Lucia's point, it's about that. It's about the balance. So I think there's a number of different ways to reach the right audience. One is data. One is different data signals, audience data, context, other elements.
Okay. I think that wraps up that part of the conversation. So I'd like to invite Julia back on the stage.
I was just ahead of you there, Seb. You did a brilliant job. And thank you, guys. And there's a couple more questions, actually, and I'm going to ask them, because I imagine, I can't see who this one's from, but I'm thinking I see Tom Jennings in the audience, so it might be from him. Stephen, you might be able to answer this. Is the syndicated player model with third-party content dead?
Is it dead? I hope not, Tom, because
I don't know if it's Tom, but it sounds like some question Tom would ask.
It's a Tom type of question, doesn't it? So I think I go back to the point that publishers need support. So there's certain things they can do themselves, and would always encourage that. Of course, we would always encourage agencies to work directly with publishers to develop content strategies. But the reality is they can't do it all themselves, and so I think the idea of them working with other vendors to take video content or other content that's valuable to the consumer, that is also brand safe and brand friendly and carries a nice premium, I think that there's definitely still a market there, as long as we're adding value, which is what we're trying to do.
And I think actually on that leads to the top question here. And I know, Ruth, you touched on this and it was brought up, but I think the audience wants to know, on the subject of Facebook boycott, are publishers expecting to see a shift in the spend that way? Is it going to have a noticeable upturn? Is everyone going to go, hooray, we're going to see that percentage finally shift? I'm going to ask this to all of you, but also Seb, because you've been writing in Digiday. There's been lots of commentary so far coming in from the press on this, on Facebook boycott. Any thoughts on that question?
I think, if we think about what's been in the press already, so it's a US focused sort of movement, but it is hitting the UK. I think there's obvious concern, and I know Dentsu sort of joined a round table with Mark Zuckerberg and had those conversations, although I'm not privy to any of the sort of conversations within that. I think it's interesting. Will other publishers see money from Facebook? I think if you think about the money that Facebook receive, a lot of it is SMEs, and they don't appear to be part of the the movement at the moment. And so if we have sort of big, we've heard about Unilever, Coke, I think Diageo, the list goes on. I don't know whether I'm sort of confused about at the moment is, are they pausing it July and August, and the money will, you know, they'll spend it for the rest of the year, or like Unilever, they've stated till the end of 2020, or is this actually taking money and giving it elsewhere, in which case obviously other publishers are going to sort of receive some of that money, you would hope. But again, it comes back to the question of what were they using Facebook for? What is that replacement? What's you know, based on from the KPI perspective? It's really difficult to ascertain how much cash could be flowing out of Facebook at this time. I don't know.
Luckily, Ruth, we have an editor of Digiday here to answer that. Sam?
Over to you.
I think to Ruth's point, I think it's too early to kind of say where that money is going to be redistributed. I think a lot of companies are still, it's July, right? It's a quiet month anyway. I think we'll know a bit more kind of once July is kind of played out and companies have a bit more of an idea as to kind of how long they're going to keep away from Facebook. I think it's, again, to Ruth's point, I think it's worth noting that a lot of the brands that have pulled budget away from Facebook don't actually sell anything on the platform. They're not direct response advertisers. They're using it for awareness and reach, right? So I think that will govern where that money goes, you know, if they decide that, you know, this is going to be a longer term thing and they need to find alternatives. I think it's, you know, we'll kind of see. I definitely think it's too early to say that publishers or YouTube are going to kind of be the key winners from this. Yeah. You have to just wait and see how Facebook, you know, responds to the demands that are being made a bit.
Well, the good news is you guys get to debate this and answer more questions, because there's still some questions there. But this is the time that we now go to the tables for the interactive part. And I'd like to firstly thank you guys for joining Union, for Union hosting this. It's been a great couple of days of events from Smart and the other members who formed this summer Adtech event. So that's been phenomenal. What we now do is I will then stop the presentation and we'll all come off stage, and you'll see a room full of tables. And all you need to do for the attendees watching is simply turn your cam on and your mic on, and you double click on any table and in you go. These guys are going to be at the table. They're going to be hanging around very kindly for the next 15 minutes to answer your questions, chat, catch up. It's the interactive elements, and we look forward to seeing you on the tables in a minute. I'll see you there. Thank you, guys.
Bye.